This is Financially Fit Business with Ruth King.
Welcome to the Financially Fit Business Podcast. Here you discover ideas, tactics, news, and information that matters to the health of your business or your clients' businesses. I'm your host, Ruth King. Here's how we will be. Let me start this again. All right. Sorry. This is podcast number 4543. Welcome to the Financially Fit Business Podcast. Here you discover ideas, tactics, news, and information that matters to the health of your business or your clients' businesses. I'm your host, Ruth King. Here's how we will help you increase the financial fitness of your businesses today. I recently had a conversation with Gary Dehart, the publisher and managing partner of Insightful Accountant. He commented that we've been told for the past 10 years or so that accountants and bookkeepers need to provide financial advisory services, but no one has told them how to do it. Well, until now. This next series is how to provide financial advisory services based on the success that I've had for the past 30 plus years providing these types of services to my clients. So let's begin. First of all, let's talk about why. If we look at what's going on in the industry, it's being disrupted, whether we like it or not. There is so much technology out there. There's so much AI out there. There's so many large language models out there who are taking the mundane, day-to-day, repetitive tasks and making them much faster. We still have to oversee it and make sure it's, they're right and everything along those lines. But the clients at some point in time are not going to be willing to pay for those mundane tasks anymore, or a lot for it, simply because they know that AI is doing a lot of it. Claude's doing a lot of the work. A lot of the AI platforms are doing the work. If you look at Digits, if you look at Puzzle, if you look at Kick, if you look at any of the other ones, they're actually making it very, very easy to provide the things that we as, advisors need to be providing to our clients. And that is trust, that is judgment, that is insight. And so the day-to-day stuff is going to go away. It is literally going to be done at some point in time. I'm not saying tomorrow. I'm not saying next week. Although, if you look at it 2 years ago, like in 2025, when I was at Engage, the head of BDO came up in front of everybody and said, there's going to be a technology company that just happens to do accounting. And lo and behold, up pop like 3 or 4 of them this year. And I've had one of them so far on my podcast, and we'll talk to some others as we go through the year. But that's coming. It is coming. So if you have 2 choices at this point. Number one, if you want to say, okay, I'm done, I'm out of here, I'm retiring, that's fine. Some of you may not want to deal with it, and that's perfectly okay. The tax will never go away, but the way you do tax is probably going to change a little bit if it hasn't already. And so people paying, tens of thousands and thousands of dollars for tax returns is probably going to go away, because there's even some tax programs out there saying that they'll do the most difficult and intrinsic types and hard types of, K1s and stuff like that. That remains to be seen. And you still have to provide the oversight, but the day-to-day mundane things are probably going to be done by AI. So what are you going to fill your time with? If you want to do other things, terrific. If you want to provide really, really, really good value to your clients and tie your clients to them even more so than they are right now, then you probably want to start looking at doing advisory services. It's important, and it actually helps your clients. Yesterday, I was doing one of my NASBA classes, and one of the people who was not an accountant, but who was in class, he was a business owner. And he said, I don't talk to my accountant except for once a year. And he said, I don't like it. Okay. And that was not provoked. I did not bring that up. He brought it up specifically. And, the room looks at it and goes, okay, maybe we should be talking to our clients more than once a year, and doing the reviews of financial statements every single month would actually make it easy to talk to your clients every single month. And that's basically advisory services. So think about it, or say, I'm done. I'm out of here. One of the 2 things, you're either going to change a little bit or a lot, or you're going to say, I'm done. I'm going to sell the business. I'm going to not have to worry about it anymore, or I'm going to retire and I'm not going to have to worry about it anymore. Your choice. But make a choice and make a decision. If you decide that you want to start doing the advisory services, providing oversight and financial review for your clients, then it's perfect. This is the time to learn how to do it and make sure that it gets done properly and have fun with it. It's actually a lot of fun. And I can tell you that after 40 years, it's really fun to have the light bulbs go on and them really do really well with their businesses and achieve the goals that they want to achieve, because it helps you achieve the goals that you want to achieve too. So think about, which way you want to go. If you're listening to this podcast, you're probably going to want to go to the point of, okay, how do we provide financial advisory services? What do we do? What are the steps? What is it going to take? And it's, first of all, going to take getting out of your comfort zone, because we've been so comfortable over the past years doing everything the same way we've always been doing it. Accounting practice has not changed, since the Venetian monks created the P&Ls and balance sheets back in the 12 and 1300s for the rich Italians. I mean, the basics of accounting has not changed. So let's look at it from a different perspective and have fun with it. And yes, is it going to be different? Yes. Is it going to be challenging at first? Yes. But is it going to be fun? Yes. And when you see the light bulb goes on in your client's eyes, you've got it, because then you've done some really, really cool things and really good things for your clients. So that's why I would do it. And that's why, shouldn't be a thing. It should be, I want to do this. It's not, I have to do this. It's, I want to do it. And then the rest of it will absolutely come as a result of that. So that's the reason why, number one. And then after we get back from the break, I want you to start thinking about changing your mind and how you bill, in terms of getting rid of billing by the hour and billing by value pricing and things along the lines there. So we'll be right back. Thanks for watching the Financially Fit Business, this podcast.
Financial advisory services are the key to the longevity of the accounting profession. If you want to get started providing advisory services or want a review of a finance course you took in college, Ruth King's manual, Understanding Financial Trends Analysis, might be your first step. This manual gives you the information you need to help your clients with their financial statements. A great start or addition to your financial advisory practice. You help them with clarity on their business's financial health, the ability to spot impending issues and resolve them before they become a major crisis, less stress and sleepless nights worrying about the financial part of their business. Your Financial Statement Trends Analysis Manual is the reference guide. What do you want in your financial advisory services practice? Click on the link below for more information.
Thanks for listening to the Financially Fit Business podcast. In the first segment, I gave you reasons to have fun with financial advisory services. And at the last thing right before the break, I said, let's take a look at how you are actually pricing and get rid of the billable hour pricing and look at it from a value perspective rather than a billable hour perspective. So it's really interesting. I've been working with contractors, plumbing, electrical, HVAC, doing financial advisory services and helping them grow their businesses profitably for about 40 years now. And they do what we would call value pricing. They just call it flat rate pricing. It's the same thing. And it's been really interesting. Think about the last time you had a plumber or an HVAC technician or an electrician or somebody come to your home and there was something that needed to be fixed. They figured out what it was and they said, okay, the price to fix this is X. And it's X whether it takes them 15 minutes or 5 hours to do it. When I was at Scaling New Heights this year, one of the slides that was put up by one of the accounting firms was that we can talk to you 130 times a month. You are going to pay for it. It's not free. And it is. It's not free at that point. We talk about scope creep, and sometimes that does happen. However, you want to make sure that you're doing the things intentionally and right, and making sure that if you are going to do value pricing, that it makes sense to do that. So I'll tell you the history of what's called flat rate pricing in the contracting industry. The guy who started developing it was a guy by the name of Jim Kimmons, who I knew very well. And I watched him struggle with contractors because they were so used to billing by the hour too. They weren't used to, doing, okay, this is the task. This is how much it's going to cost. This is the project. This is how much it's going to cost. If you have a heating and air conditioning system replaced in your home, it's a price, one price. And it's not facing, okay, it's going to take us, 6 hours or 12 hours or 16 hours or whatever else it is. And they say that, and we'll charge you that way. It's literally one price. If it's a repair, it's generally one price. So if you're providing these services to your customers, it should be one price. And obviously, we're not going to do audit for that. We're not going to do, those types of things that we can't do in a flat rate pricing scenario or a value pricing scenario. If somebody gets audited by the IRS or you're handling an audit or something like that, there's no way you can tell in the beginning how much time it's going to take. And that still has to be hourly. And that's okay. But the reality is that you can do the majority of what you do, provide the services from a flat rate perspective. And if you have business clients, they will appreciate it, especially if they're contractors, because they're used to doing it this way. So when you present this to them, it makes it very easy for them to understand what you're doing and say, okay, this makes sense. This doesn't make sense. I promise you, no contractor likes a surprise tax bill. If you're doing their books and you've got it done and it's smooth and everything along those lines, there's no surprise bills. Everything is there on a monthly basis, and you can have different levels, and they can go from level 1 to level 2 to level 3. But back to the Jim Kimmons story. So in the beginning, when we were doing flat rate pricing, most of the contractors folded their arms and went, I'm not doing that. And the ones who did it ended up doing really, really good things for their clients. They ended up getting many, many more customers as a result of it, because they also were in a situation where it's a good thing for the customer, because it didn't matter whether a guy was slow repairing something or quick repairing something. The customer paid the same price. And if it was on an hourly billing perspective, the slow guy charged a whole lot more for that repair than the fast guy. And customers got wise to that. They got very, very wise to that. And I ask you the same question for us. If you're billing by the hour and somebody takes an hour to do something and somebody takes 3 hours to do the same task, is it fair to bill the customer for the 3 hours, or should the task be at the hour? I mean, think about it. It works in our industry as well as all the other industries. So, little by little, people started adopting it. And it was interesting when Andrew, the hurricane, hit Miami. Everybody was down there trying to gouge prices and everything else like that. And those who were on flat rate pricing were the ones who got the work, because the insurance companies knew exactly what they would be paying for. It wasn't an hourly billing. And I think that's essentially many, many years ago when flat rate really, really took off, because those are the contractors who got the work. It wasn't they were going to bill millions and millions and millions of hours. And I'm exaggerating at that point. But the reality was that the insurance companies knew, the customers knew, everybody knew what the price was going to be. And I think a lot of the pushback more so came from the technicians and came from the installation crews, because they didn't want to be judged, gauged, evaluated, whatever you want to put it, by how efficient they were at doing the jobs. If the job was supposed to take an hour, and somebody took 2 hours to do the job, they got called in. Why, talk to me about how you did this job and why it took 2 hours. And likewise, if it took a half an hour, we wanted to make sure that why it took such a short period of time to do it, and make sure that they weren't cutting corners either. So it's really interesting, because what we did, in the 90s, basically, for the construction industry, the contracting industry, we're starting to do now for the CPAs and accounting and bookkeeping. and giving the customers a flat rate to do the work that they need to get done. So it's not a situation where it's not uncommon. Customers, especially contractors, understand this, and you get paid for value rather than necessarily get paid for a billable hour. I think in the beginning it's scary. It's definitely scary to do it. However, if it's done right and you make sure that the information and we've calculated the hours right and those types of things, you'll be surprised at how many more customers, number one, appreciate what you're doing, but number two, how much more value you can provide to those customers. Because I know right now a lot of your customers and a lot of your clients will not make a phone call to you because they think they're going to get billed. Now, yeah, you're not going to have them make 130 phone calls a month. They are going to be billed for that because, per slide type thing. That was at Scaling New Heights. But they're going to be more open, especially in the beginning, to ask questions. And at that point, probably save them money and save them heartache and those types of things. So, think about why you want to do it and think about putting it together with respect to value pricing or flat rate pricing, as we called it in construction. When we get to the next session, we're going to talk about, okay, who's our great advisory client? So stay tuned for the next episode. Thank you for joining us. Choose one thing that you discovered and implement it in your business. These ideas, tactics, and strategies help you make more money, have more free time, and give back. If you like today's program, spread the word. Please review this podcast on any device you're listening to it on. Help a business owner improve the health of his company. For comments or questions, call me at 770-729-8000 or email rking@financiallyfit.business. Thanks for listening. Have a great and profitable day.